Hey, what's up, tycoons? What up, traders? Super excited for today's video. Checking out CKB. All right, we're looking at the daily chart. We're going to break down some of this recent price action, and then we're going to zoom out and look at what some of the more macro patterns are and what some of the macro trends are, and see if there's anything we need to be cautious of, or if we could be, going on a little bit of a bull run here soon. All right. So the first things we're going to look at is going to be divergences. Then we'll break down chart patterns, and then we'll go over retracement levels and how you can use the fibs and retracement levels as very valid support and resistance levels. So if you learn anything, smash the like button. If you enjoy the video, subscribe to the channel because I'll be dropping 5 to 15 videos a week. I do viewer requests. This is one of them. I do those viewer requests every single week as well. Okay. So let's jump straight into it, and let's look at how we have a low and a lower low, right? Indicated by these circles right here. Clearly, the token is in a downtrend, but if you pay attention to your relative strength index, you can see that we make a low and then a higher low, right? So the token is dropping, but the relative strength is increasing, all right? That's known as bullish divergence. It's an indicator you may see some bullish activity in the future, okay? And if we look, we ended up getting a 95% move to the upside. Ultimately, we ended up running up about 117% at the highs. So that's a really good indicator that a lot of people use, especially like myself, some people who, focus on technicals and technical analysis. It's something that you can use to really give yourself an edge, right? You need an edge when it comes to trading and investing. It's like going to battle, going to war. You have to have as many weapons as you can, and you have to bring the right weapons, okay? You can't go into a gunfight with a knife and yeah, that's basically it. Okay. So divergences across the RSI is one of the first things you can use to give yourself an indicator of future bullish or bearish activity. All right. What we get shortly after that is a form of bearish divergence, right? And this time we're making a high and then we're making a higher high. So the token is going up in price. The relative strength should follow that. But if we look and we see, what we actually get is a high here, and let me redraw this trend line a little bit, and a high right there. Okay, so we have lower highs, we have a high, lower high, we have a high, higher high. So that's a divergence, a bearish divergence, and it's an indicator you could see some bearish activity, and we do get a very sharp drop afterwards, right? Now, you can also use chart patterns to help give yourself an edge, right? One of them being the rising wedge indicated by these two trend lines right here. A rising wedge is a bearish pattern, and as soon as you break this bottom trend line, you're going to get a sharp move to the downside. And in a perfect world, the pattern is going to play out to where the pattern began on the downside. And you can see we end up going and hitting those targets. The next thing that we're looking at is going to be a bullish divergence. And there's two ways to measure it, right? You can either take the longer divergence, right? So the low here and the low here. This is a much larger trend than this low and this low, right? And you can connect that. And what I did here was I just used this initial bullish divergence trend line that we've been holding. So we already bounced once off of it here. We already bounced twice off of it here. If we do get a pullback, we have this relative strength trend line, that we could look to see for a bounce, right? To save us. Now, if we break this, most likely we're going to be heading lower. And then we would break this channel right here, this bullish channel that we're currently in. All right. So that's really the major things that I'm watching. Now you could draw it like this, okay, and you could just connect these two lows, and you can see that we've been bouncing off of this smaller trend line a couple times already, right? We got our bounce here. We bounced one, two, three, four times, and then we got a nice little push to the upside. So we're going to see if we can, hold these two trend lines right here. These are bullish divergence trend lines, and these could be what save us if this token decides to pull back, right? These are going to be our bounce levels. Now, the more time you test a trend line and you test any level, the weaker it gets. So you have to keep that in mind. We've already tested this one a couple times, this longer one, and we've tested this much shorter one a few times and already got a nice bounce. We're going to have to see if buyers can keep control every time it bounces off of this trend line. Okay, now let's go into our retracement levels, okay, and why those are important. What we're looking at currently is going to be a retracement level of this move down, right? So we've had a very sharp move to the downside. We've really been consolidating, but nothing is going to move in a straight line, right? So it's going to bounce and then retrace and continue the move downwards, right? Now, we may not come up to these retracement levels, but these are the three most common retracement levels. And we'll go over examples in the past of the chart and the history of this chart of where they were very valid, right? So it's going to be the 38.2, the 50%, and the 61.8% level using the fib tool, okay? Using this tool right here, right? And we're going to see, all right, if we can come down and bounce up into one of these three levels. If we break through these levels, then we have the possibility of trying to, start a reversal, okay, and come down something like this. And if we take out this high, then we have the chance of starting a new trend and making a high and a higher high. But for now, this thing is in a downtrend. So most likely we'll come up, get rejected, and then continue the downtrend, right? And continue making lower highs. But again, if we come up and break through these levels, and then we're able to make a high and a higher high, that's going to be the first step to our reversal. Okay. So that's where we got these three levels from. That's why we're looking at those. Um, and what we'll do next is we'll come over here to the beginning, and instead of resistance, you can use these as support levels for your retracements, right? To determine if you're still within a healthy trend. So we have our swing low connected to our swing high up here, right? We have that sharp move to the upside. We come down, we retrace, and then we hold our three retracement levels, right? We hold the retracement levels. This wick right here, there's lots of wicks in cryptocurrency. Price action is very, very volatile. So it's very important to pay attention to the bodies of the candles. And you can see that the bodies of the candles are holding the 61.8% level on the fibs. That's also known as the golden ratio. So it's a really, really important level for, making or breaking a current trend. All right. And then we go ahead and look, and we do the same thing again, right? If we take a look at, our lows to our highs, right? We come in and we're retracing and we're holding these three levels every time on this initial uptrend, right? So now we're taking this low, connected it up to the high. We come down, we retrace, hold those levels, and continue the uptrend to the upside, right? And we can just keep doing this over and over and seeing that it's working each time, and we're holding those retracement levels, and that's when we're continuing the uptrend, right? So now we have this low connected up here to the high. We retrace, all right, and then boom, we head higher. Okay, so those are some simple things that you guys can start doing and adding to your chart to help give you that edge, so that way you have the proper weapons when trading. Okay, we come over here, and then this is when we can see that not only can you use them as support, but you can use them as valid resistance levels, right? So we're taking the retracement of the move down, we come up, we retrace that, and we have our three retracement levels, and these are going to be super strong resistance now, right? So we have come down, hit the retracement levels, reject, and continue heading lower. Then we take this high, connect it to the low, to this low right here. Okay, so we come down, retrace, continue heading lower, right? So that's how you see the trend. That's how you can tell, basically if we're in an uptrend or a downtrend. And that is an easy way to give yourself three major support or three major resistance levels that can let you, have a little bit of an indicator of what the trend is, if there's a trend reversal or if it's a trend continuation, right? Here's another example of bullish divergence right here, where we're making a low, okay, and then a lower low, right? The relative strength index makes a low and then a higher low. You see we bounce off of this trend line about two times and then get a very strong push to the upside. That was a nice move, right? If we look at the lows to the highs right there, that was 40%. Good trade, that you could have got into. And what we're really looking at, right, when we really zoom out, is this really kind of looks like a bear flag, like a big, big bear flag. So I'm a little bit cautious if we'll even be able to come up to these three retracement levels, because, we have our flag pole right here, this very sharp move to the downside. And now we're really just absorbing a lot of that move down, right? And just consolidating through here. This is a textbook bear flag. If we break below this bottom trend line right here, we're going to get a very sharp move to the downside. So that's really what I would be cautious of. But we do have these bullish divergences we went over in the very beginning. All right, that could help push us up here to the top of the channel. But we have to really see if we're going to be able to break out of this channel, and start making some higher highs, right? We need to make a higher high from here, some type of higher high up there. But then we're going to be battling the three retracement levels, and those are going to be really tough resistance. So there's a lot we have to do to actually get a reversal on this and start an uptrend. But that doesn't mean it's not possible. It just means that you guys, should use a little bit of caution. Figure out what entries and exits you want to get in at and get out at. And then also, use some risk management and set some form of a stop loss or some form of risk protection, right? So that's it for today's video. Appreciate you watching. Don't forget to smash the like button and subscribe to the channel. And if you like this video, let me know what ticker you would like me to break down next, and I'll be happy to do that for you.